Alright guys, and here on our news it says here, analyst XRP will create a new wave of millionaires in next 2 to 3 months. Now, let's try to imagine standing on the edge of a massive shift in the market, where the quietest periods of sideways price movement are actually holding the key to life-changing wealth. Right now, as the broader crypto landscape sits in a state of hesitation, a major comparison has surfaced that bridges where we are today with one of the most explosive historical setups in recent memory. Could the current price action be laying the groundwork for a massive expansion in the coming months? So in this video, we are going to dive straight into a fascinating technical breakdown that has ignited a lively debate across the community. We are analyzing a bold perspective shared by analyst Steph Is Crypto on X, who suggests that XRP could be on the verge of creating a brand new wave of millionaires over the next 2 to 3 months. So let's break down the charts and look at the historical accumulation patterns, address the community's biggest questions, and evaluate what this means for the broader market structure. So let's start with our very first question. Is the current market structure repeating the 2024 setup? So the entire core of this thesis relies on a side-by-side fractal comparison shared on X by analyst Steph Is Crypto. In his post, he presented two distinct charts, one detailing XRP's market behavior during 2024 and another mapping out the current performance. Both periods highlight a distinct phase labeled as accumulation window, where the asset traded inside a tight horizontal range following a noticeable pullback. Now, back on 2024, that's on this in this left side of our chart right here, after spending several extended months moving sideways within this defined zone, price action ultimately shattered the upper resistance ceiling, and it has triggered a rapid multi-stage rally. So fast forward to the present chart, this one, 2026. The price has once again settled into a comparable consolidation range after retracing from earlier highs. A dotted trajectory line, this one, drawn. It has a dotted trajectory line drawn by the analyst right here, outlines a path where history repeats itself, starting with a clean exit from this accumulation floor and climbing steadily toward a price target near $4. Now here's my opinion. I see a clear psychological pressure cooker at work. While short-term traders often lose interest during sideways chop, history repeatedly demonstrate that heavy institutional positioning happens quietly behind the scenes during these exact lull periods. Now, watching how closely the current structure matches the 2024 pre-breakout footprint tells me that patience rather than impulsive trading is usually what separates market participants during major macro cycles. Now, why is the 2 to 3 months timeline generating debate? When bold predictions are made, critical questions naturally follow. The claim to a 2 to 3 month window could produce a new wave of high net worth market participants immediately caught the attention of community members on X, specifically a user going by the handle Dapos Papa right here. He challenged this aggressive time frame, pointing out that price action has experienced short-term weakness even during periods marked by major regulatory discussions like the Clarity Act. The post-Papa's inquiry highlights a classic conflict in market analysis, and that's the disconnect between short-term sentiment and long-term technical structure. While market news and regulatory headlines often generate immediate expectations, price action rarely responds in a straight line. Instead, assets often experience short-term dips or prolonged periods of disinterest right when broader narrative hype reaches its peak. Steph Is Crypto did not issue a direct response to the comment, letting the structural chart comparison remain as the primary foundation for his outlook. Now, here's my opinion. It is completely understandable why traders get frustrated when price action drifts downward during high hype events, like major legislative discussions. However, my perspective as a market observer is that market dynamics often operate on a delayed reaction model. Fundamental catalysts build the underlying engine, but technical structures determine when the vehicle actually starts moving. Expecting instant vertical moves the moment a news event lands usually leads to misreading the broader trend. Now, what role does the accumulation window play in long-term targets? Rather than getting caught up in a micro fluctuations or daily candlestick color changes, the analytical model presented by Steph Is Crypto right here focuses squarely on macro market architecture. An accumulation window represents a period where supply and demand reach a temporary equilibrium after a downward trend. During this phase, weaker hands gradually exit their positions, allowing stronger, higher conviction capital to absorb the available liquidity without drastically driving up the price. Now, the projected path on this chart illustrates a step-by-step progression. So on phase 1 is a range-bound consolidation, and that's holding strong support levels while moving sideways to absorb remaining selling pressure. In phase 2, this is the resistance testing. This is pushing against the upper boundary of the accumulation zone. And then phase 3 is the structural breakout. That's converting former resistance into a firm floor and accelerating toward higher valuation tiers, ultimately aiming for the $4 mark. Now, here's my opinion. Focusing on structural integrity over daily noise is the most rational way to approach market analysis. When an asset stays contained inside a well-defined consolidation zone, every retest of support or resistance provides valuable data. So in my view, observing whether an asset can maintain its structural higher time frame boundaries is far more telling than reacting to emotional swings driven by single-day price movements. Now, can historical fractals reliably predict future price action? Using historical price patterns, often referred to as fractals, is a widely discussed methodology in financial markets. The core premise is simple. That's human psychology and institutional capital deployment tend to repeat similar behavioral loops across different timeframes and cycles. When a specific chart setup closely matches a previous winning structure, analysts look at it as a roadmap of potential outcomes. However, relying entirely on fractals also carries inherent risk. External variables, global macroeconomic liquidity, shifting regulatory environments, and overall crypto market sentiment mean that no two cycles are ever 100% identical. While the 2024 breakout provides a compelling historical visual, market conditions must remain favorable for a similar expansion to materialize in full. Now, here's my opinion. Fractals are fantastic tools for identifying high probability zones, but they should never be viewed as absolute guarantees. So as a market observer, I treat historical comparisons as guideposts rather than rigid scripts. Pattern repetition gives us a framework to manage risk and monitor key structural levels, but remaining adaptable to real-time order flow and macro conditions is essential for navigating any digital asset market. And finally, here is our overall conclusion. The comparison presented by analyst Steph Is Crypto here offers a detailed visual perspective on how XRP's current price consolidation aligns with its 2024 accumulation phase. While community skepticism regarding short-term price weakness and timelines is completely valid, the structural similarities between both periods highlight a market that is once again moving through a critical consolidation range. Whether the asset strictly follows the projected path toward the $4 over the next 2 to 3 months remain to be seen, but monitoring these key accumulation zones will be vital as the broader cycle unfolds. Alright, and this finally ends our video. Thank you very much for watching and see you on the next one, or you might just as well check this next recommended video right here.